It's going to be an action-packed 10 minutes for all our viewers. Have two key managements joining us at this point in time. We have Mr. Sunil Duggal, who's CEO of DABUR India, joining us from Delhi for a business outlook on their company. And also we have Mr. S. Ramesh, who's the President of Finance and Planning at LUPIN Laboratories, joining us from Mumbai. Mr. Duggal, let's start off with you. Good morning to both of you. Let me just start off with you, Mr. Duggal, because the concern really on how drought can impact demand for a company such as yourself is pretty high among the analyst community. Now, I have read some wire reports suggesting that DABUR is not looking at hiking product prices despite input costs going up. What would that mean for your margins, and how are you positioning yourself to really counter the situation?
Well, on the drought part, there has been a 20% deficiency in the rainfall, and that obviously means that there will be some lack of output in terms of the whole agri produce. Now, it doesn't worry us unduly, because I think there are two very important mitigating factors which would seek to keep demand alive. And one is the commitment of the government to keep rural incomes high, and that's a very strong commitment, and we believe that government will take every possible measure to make that happen. And the second is that the outlook for the winter crop is pretty benign. We believe that the winter crop will be perhaps a record one, and the farmer does see a little bit into the future and is unlikely to cut back on his spends, particularly in non-discretionary items such as which we make, because of just one bad monsoon and one crop failure. So, and on the second part, which is the material cost, yes, we believe there will be inflationary impact. The material cost environment was very benign in the first and even in the second quarters. There would be some margin compression in the third and particularly in the fourth quarters as of now. We believe that we have adequate amount of pricing power available to us, which means that we can take up some prices in a calibrated way to neutralize the inflation in the third and fourth quarters if necessary. And also we have some headroom in terms of costs. We can compress A&P spends a little bit. We have been spending well ahead of last year's budgets in the first quarter. And there is scope for some amount of contraction on that area. So we're not unduly worried both on the demand front and on the margin front.
Fair enough. Mr. Duggal, although you're not unduly worried, does it concern you, not probably on some of your urban products, but the fact that if there is indeed contraction in rural incomes, then that could probably lead to a bit of a contraction in demand? Or that is, I mean, you completely...
It's possible, yeah. There would be some fall off at the lowest end of the consuming basket for our products. But there also would be some amount of downtrading which would have perhaps benefit us. So we believe that the downtrading impact would mitigate any outflow of people from our brands. So net-net, I'm not very worried about demand, and particularly on the back of the Rabi crop, which I believe will be very good.
Mr. Duggal, one view also is that it's typically the year after, after a drought is when you see the actual impact coming in. Do you see that? Do you see 2010 being the critical year for you then?
There's no sound coming.
Mr. Duggal, my question is that very often it's the year after the drought or the year after the shortfall in rainfall when you start to see declines kick in. So do you think 2010 is going to be the critical year for you to watch out for? Okay, I think we have a slight audio problem there. Let's quickly cut across now and change tracks, come onto the pharmaceutical side of the business. And we're joined by Mr. S. Ramesh, President, Finance and Planning at LUPIN. Mr. Ramesh, can you quickly take us through this new Para 4 filing that you have? Give us a sense of the size of this drug. How much is it going to do for you on the top line, and in what time horizon is it going to do that?
We've got about 91 submissions to the FDA authorities, of which about 30% of that would be actually Para 4, so to speak. We got about 9 or 10 F2Fs in our portfolio, of which at least 3 of these would be exclusive. So we do have a very rich pipeline to serve the American markets.
Yeah, we're talking about this particular Para 4 certification on 2 oral contraceptives that you have. That's the one that we're talking about, Mr. Ramesh. A little more details on that.
No, those were relating to, if you're talking about the recent ones, it is basically relating to the oral contraceptives. And, these are something which are, we've just been litigated on those. And so it's too early to actually comment on that. It's actually a new therapy area that we have entered into in the U.S. We made some submissions to the authorities. So it's actually too early to talk about, what would be the outcome of such para 4s.
Right, Mr. Ramesh, the market is rife with news about you being in talks with Daiichi Sankyo for a marketing contract. Could you confirm that or comment on that?
Actually, that was baseless because, there's no such conversation that's happening with Daiichi. So it is something that needs to be denied.
What about your geographical spread? Because the opinion there was really that, given your foothold in Japan, you're not going to be, and in Africa, you're not going to be looking at strengthening your base in the European and the US markets, particularly with this para 4 drug and stepping into the oral contraceptive segment in the US. What's the plan on that front?
Geographical diversification is part of our overall game plan, in fact. Obviously, whilst we drew up our overall strategic plan, we looked at various geographies in various parts of the world. And obviously, we found a lot of those areas to be of interest to us. And these would be across various regulated markets as well as semi-regulated markets. And we have gone about actually trying to spread our wings across those markets in a very in a staggered fashion. And the entry strategy for those markets obviously would be very different. If we talk about America, we decided that we would obviously have an organic presence. And there again a pretty distinguished presence in that we have a branded play there as well. Talking about markets like Japan, South America, South Africa, Australia, Philippines, we obviously these were territories which were of great interest to us, and went about it systematically in actually looking at acquisitions because we believed that entering those organically could be pretty difficult.
Sure. Mr. Ramesh, I'll actually switch back to Lostrin and Femcon if I'm not pronouncing them wrongly. While it's too early to talk about those, if the size of the market is indeed $300 million, and if it does indeed prove to be fruitful for you, what kind of an intake could the market expect in terms of those two products for Lupin?
Actually, as I said, it's too early to actually talk about any product-wise revenues or anything of that kind. And in any case, we are not in the habit of actually giving guidances or for that matter talking about product revenues or profitability for that matter. So I think I would not like to make a comment on that.
Okay, I tried my best. In which case, give us an update on Mandideep, Mr. Ramesh. Latest update on that one. What's up with Mandideep?
Yes, as you know, we did receive a warning letter. But the good thing about it was that it was basically talking about issues that they had raised before. It actually called for a lot more explanations and documentation. We did submit that, and as of 30th June, we did have a face-to-face meeting with the people in the FDA. The meeting went off very well. We believe that there would be a re-audit of our facilities shortly, and after that, we should be in the clear.
Fair enough. We'll wait for more updates as and when it develops. Mr. Ramesh, appreciate you taking the time out and joining us. Many thanks for joining in. Well, a bit of an audio problem earlier with DABUR, but I believe we've reconnected. So let's go across to Mr. Duggal. Mr. Duggal, one more question. You said that you're probably not seeing too much of a dampener in terms of demand. In which case, what's the plan ahead for DABUR for the next 6 months or probably for the next 12 months going ahead?
I think business as usual. We'll continue with our very aggressive new product developments. We'll continue with expansion into new geographies, overseas as well as into the interiors of India. And at the moment, we see no need for any course correction. I think the consumer sector, our products in particular, are pretty immune from cyclical. And I think we take a lot of heart in that the farmer will see income visibility consequent to the winter crop and will not significantly change his consumption habits. Now, the other issue in terms of margin compression, we believe we have adequate amount of pricing power as well as some headroom in terms of management of costs so that we can manage that part also. So I think as of now, it's business as usual, nothing really changing on the ground.
And any further updates on the retail venture at DABUR? Is that going to be delayed? Any timelines that you can share with us?
Well, we're going slow on the retail venture. We have significantly reduced the number of new store openings. We have at the moment currently 10 stores. We plan to perhaps take it up to 25 by the year end. And we're increasingly going into a revenue sharing model with the landlords. I think that works better in the current context. I think the retail environment is still under huge stress, and it is not very meaningful to go into rapid expansion as of now. So I think we are being very conservative in that area.
All right, Mr. Dugal, thank you so much for joining us this morning. That's the view coming out of two corporates that we've spoken to this morning, LUPIN and DABUR. In the meantime, our own markets are trading fairly flat, 46.97 on the Nifty, and the Sensex is at 15,820. It is really the realty pack which is soaring up ahead, and it's the IT pack that's seeing a little bit of profit booking coming in. The likes of an HCL Tech down 1.5%, Wipro down 1%, and so is Infosys. So that's the flavor this morning. It's a wrap then from all of us on the morning show. Opening shots finishes off now, but stay tuned for a lot more action on the markets, keeping you updated on all of that on ET Now.